Daughter in the city, rushing to me. Down home, upstream, are you with me? Round up, rainbow, daughter in the city, rushing to me. Down home, upstream, are you with me? Feel it.
Hi, I'm Michael Owen and I'm thrilled to join Weeks as their global brand ambassador. In football, success comes from precision, speed and strategy. Every move matters. With 1,000 plus trading pairs, you can trade spot, futures and more. And security? Weeks leads the way with Plus, a 1,000 Bitcoin protection fund. Join me on Weeks, where new wealth is made.
Hello, hello, hello. Welcome to Trading Congress 2025, a full week of focused education, market insights, and practical guidance designed to help you become a stronger and more confident trader. This year, Trading Congress is supported by our partners EdgeX and VIX. Thanks to them, who made this entire edition free for everyone. All the key links can be found in the description below. All right, legends, myself Taha Khan, and I hope you all are doing great. Today's session is about understanding legacy markets and why they matter now more than ever. I know the audience is mostly from the crypto background and they know the legacy market, but today we want to go a little into detail. So in 2025, we have seen strong moves in gold, indices, and crypto. And all of these moves were driven by macro forces, which we want to discuss in this webinar. The dollar, the DXY, yields, liquidity, and global risk trend. So we will discuss in this webinar. And when you understand the legacy markets, you stop reacting to price and start anticipating cycles. So that's the goal of today's webinar, to give you a clear framework for reading what's happening now and what might come next. So we will draw some of the scenarios from what has happened in the 2025 and what we are expecting in the at least first quarter or the rest of the year in 2025 and in the first quarter of 2026. So I have prepared a presentation for you. Let me share my screen and give you the overview of this webinar. All right, I hope you can see my screen. Yes. All right, so legacy markets, as I mentioned in the intro, that I know most of you are from the crypto background, so this might sound new to you, but these legacy markets are very old and they set the foundation for every new markets. A little introduction about me. I deal in the legacy market analyst at the Burp Nest. For the education side, I have done CMT level 2 and CMT level 3 aspirant. What I trade here local Pakistan stock market, and I do trade forex from with the prop accounts, and in those accounts I do trade commodities as well. So I have this specialize in multi-asset analysis across global indices and commodities. I have spent several years trading Pakistan stock market, and then I realize I do need some formal education like technical analysis. I call myself a technical analyst, but I wanted some formal education, so I pursue CMT, and from there, I got a disciplined and data-driven approach to uh, trend identification and intermarket analysis. I sometimes also write for local newsletter and talk about what is going on in the local stock exchange and which item to focus on. So this was my intro, and this is the today's agenda. uh, these things we will go through. What are the legacy market, the year to date performance of 2025, some of the legacy scripts, the dollar index, the heartbeat of forex market, risk on, risk off. You often hear this term on social media, and you hear the experts are mentioning, okay, we are in the risk on environment, we are in the risk off environment. So what is it actually? So we'll go through that, and then the macro scenarios. We'll go to the live charts as well and see some of the potential setup, especially in the DXY, and we draw some conclusion, and we you might be able to connect some dots from there. And then the TBN perspective, where we are coming from and what we are helping you. So this is the agenda and some conclusion Q&A, and I would like to invite everyone to ask questions along the way. Your valuable interruptions are most welcome here. So let's begin. What are legacy markets? uh, Legacy markets, if you talk about it, means the long standing traditional financial market, the one that have been the backbone of the global economy for decades. As I have been mentioning, that most of you knows crypto, and crypto is like not very old, it's decade or 2 decade maybe. But stock markets are here for like thousands of years, and they evolve with time, and most of the things coming from it. So what does they include? These include stock markets, global indices. You talk about New York Stock Exchange, you talk about like UK markets, you talk about German index, you talk about uh, Japanese Nikkei. So and you also hear people mentioning, okay, gold is rallying, silver is rallying. So they also come in the legacy market, the commodities, and then the foreign exchange market, which by the way is the largest market in the world by volume, and it trade like trading over 7.5 trillions per day. It's very huge. And of course the bond market, which actually drive most macro cycle. So when I mentioned why I was pursuing CMT, I came to know that okay, this bond market is the one which drives most of the and the trends, which drives and the reversals, which drives the bullish trend, which drive the bearish trend. So you have to keep an eye on what bond market is doing. So this all markets come under the umbrella of legacy. So these markets create uh, global liquidity and risk sentiment. So after this webinar, after this free trading congress, I hope you become better than what you are today and what you were yesterday. So before anything show up in crypto, before you see moves in altcoins, like everyone talks about altcoin season, or even Bitcoin railing, the story usually begins in legacy market. So that is why understanding legacy trends, equities, dollar flows, yields, commodities is essential for every trader. And this will we do in this webinar. Uh, regardless of what you trade, even if you trade crypto, and if you keep an eye on okay, what is happening in the background in the legacy market, it will help you eventually. Let's move to the next slide, and let's talk about some year-to-date performance of some of the major scripts, some of the major indices, some of the major commodities, what they have done in the year 2025 and their performance till date. Uh, so first and the foremost is the disclaimer. This data is driven from the trading view charts, and all the figures you're seeing in this table is from the uh, all of these things are derived from TradingView, and it was last updated on 25th November. So if you see any discrepancy, you can expect, because it was taken during on markets. So expect some changes, not much, but some. So this is year to date performance of some of the uh, legacy markets components. The first one is the commodities, and we all talk about gold and how much gold has performed this year. It's phenomenal, 57%. uh, but was the gold really the one which you need to follow? I don't think so. Silver is the one, and if you see in the chart with the year to date percentage, it beat everyone in the commodity cycle, and it accounts for 77%. And when we'll see the live chart of silver, we'll see it is eyeing for more. So we may have this percentage moves to 80 or 85% by the year end. So we will analyze that as well. US oil, negative performer. Net gas, year to date, is a very good performer, and I'll show you some of the seasonal in the net gas as well. The other one is the global indices, and I have included UK 100, accounts for 17.45%, the German index 17.4%, and just like if you have that notebook in your hand, if you have uh, something where you are writing or take notes, just mention DEX, because when we analyze, we'll see, okay, year to date performance very nice for DEX, 17%, but was it actually uh, like trending? So we'll see that. And Nikkei, Japanese yen, which is the hot topic these days, their bond market is a hot topic these days. Are they going to like causing global crash or not? They accounts for like they beat everyone in the year to date performance, and they account for 23% uh, performance for year to date. Nasdaq 18%, and they are really so because of those magnificent seven, and we include those uh, seven companies in it. And S&P is quite lagging, 14%, and it might catch up. And when we see the current trends, we'll see, okay, S&P might be standing at the resistance. And then the US 30 is lagging as well with with 9.22%. The other bond markets performance is I just included two just for the sake of understanding, and they were down, and this is the reason why we see rallies uh, in global indices. But the question to you, this global indices actually beat commodities? And I don't think so. Commodities were the outperformer in the 2025, and we'll discuss what has happened. So negative performance for the 10-year bond, and negative performance for 30-year bonds as well. Now let's see, like, have this table in your mind, that what is the performance, and we will see this and connect with the macro events as what has happened in 2025, and see the year to date charts. All right, so let's just quickly go through these yearly charts, and this is the gold year to date charts. And if you, I mean, let me hide this and bring the presenter pen. Yeah, if you see, the year started with the rally, and usually we see gold rallying at the start of the year, uh, and it made a top near April and May, and then as a technical analyst, we used to speak the price went into the consolidation, price went into the sideways, and price was waiting for something to happen. And then what has happened, we will go to that slide, that what that macro event shift which causes gold breakout, and gold rallied all the way from 3300, 3400 to 4400. So it was 1,000 point jump during just August to October, and then price is struggling to make new high right now. And this is the Thanksgiving week. We still have 1 month left, and as I mentioned that in the next year, which the early January cause gold rally, so we might see this breakout. Silver, mostly people forget it. It comes under the store of value and the industrial commodity as well. And look at its performance here today. 77% accounts for, and it was like there is no consolidation. I don't see any consolidation in the chart. It rallied and then there was a major dip, and then price went up to make newer highs. And right now it formed on a shorter time frame, it formed a double top pattern, and price is trying to break. I guess this chart is old with reference to today's chart. I guess silver is breaking all-time high again, so we'll come to that again as well. Oil, I think two things, if you are following legacy market, two things Trump has done in this year. Number one is a tariff. When he joined, I mean, crypto traders were expecting, okay, he will like bring the alt season, he will like when it will let him join, and he's a pro crypto trader, and they all are disappointed right now. But he does two things during this 2025. The one is a tariff announcement, and that causes a lot of volatility in the end of first quarter. We see market topping in the Feb and then bottoming in April, and then we have a sharp rise. And his second focus was on to like stopping war or talk about peace. That is why he was like nominated for the peace Nobel Prize as well. So oil, I mean, if there is a war, oil will rally, especially in the Middle East. So there was this tension, and just remember this, during April to June, there was this tension when price technically double bottom, it broke the neckline resistance and then went up to meet its high. But then we are seeing it's in the bearish trend, and I think it is sitting here comfortably until unless we see any major development in the Middle East, especially. Right now all is good. He's making good deals in Saudi Arabia, in Kuwait. So I mean, all is good, all is well. So oil is not really the major driver. That is why you see year-to-date performance is negative in oil. The next is the natural gas, and when I showed you, I mentioned that there is this seasonal trend, seasonal rally. As a technical analyst, you need to find that seasonal behavior in any charts. And this is the natural gas chart. Year-to-date performance really good. It's 27%, and usually it connected to somehow the winter rally. And when you have the shortage of natural gas, it rallied in this time period, in this time of the year. So last year, what has happened in August, we see a bottom, and price started to rally and break 2024 year high, and went up to make new high in this year, and price then bottom it out. And in August again, price started new higher high rallies, and likely it will break all this 2025 year high as well. So just a touch of what can happen if you read like macro analysis. If you know the seasonal tendency, it becomes quite easy. You start connecting dots, like what is happening in the global economy. Now talk about the indices, and when I was mentioning the year to date percentage, it was mentioned that it accounts for 17% year to date performance. But if you see from the bottom, which was the yearly low, you see 31%. So if you are aware of Trump policies, if you know that these tariffs are not practical, they will ultimately sign, you might catch this bottom. If not the bottom, you might catch early declining, or the early rises. Then I mean, you can beat UK 100 index as well with your performance. So right now it's in bullish trend. As I mentioned, that the scenario right now is equity market perform, gold perform, bonds didn't perform, dollar remain range bound. The Japanese yen, it beats all of the markets with year to date performance of 23.6%. And again, it's in clear bullish trend, no major dips. Uh, I see in this chart, and it is likely continue. The German DAX, again, as a technical analyst, you might read, okay, it has given 17.5% return year to date. But what is actually happening? If you see the 6 months gain, it's standing with minus 1.34%, and you see this range bounding. All right, and in technical terms, we say the bigger the base, the higher the run. It might be a distribution. Price is just consolidating before a bigger drop, bigger bearish rally, or it might continue the upward trajectory, and this becomes a very good support zone. So you need to analyze all of these with the technical setups, and then as a trader, you react wherever. If even if it has a breakout above, you sit with the bulls. If there is a breakout below, you sit with the bears. But understanding with macros, like what is going on in the world, you might predict early that what is going to happen. All right, quickly, the US 30, it lagged a lot with the just 9% year to date returns. But again, you see clear bullish trend. US 500, it is standing at big resistance, and we'll discuss when we jump onto the live charts. It is also lagging with the Nasdaq, and this is the Nasdaq chart. And we all know that the AI rally, and people are fearing AI bubble burst. So it is performing well, and somehow leading the US markets, and it is rightly so. Until things change otherwise, we have to remain bullish in Nasdaq. The 10-year bonds is negative, and they're likely so, because if these goes down, the other markets perform. Now the major market performance in like 2025 and what has happened. The first thing is Trump announcement, Trump joining the office. It was early in the January, and we see markets reacting well, made new highs. But I mean, in first month, he create a lot of volatility with immediate tariff announcement, tax cut, expectations with new countries. So this created volatility. We saw decline in the equity market, and then bottoming up in April, and then from there on we see a good rally. So new trade policies pressured global markets, and I mean, dollar broke down as well as a safe haven. Oil shock, inflation surprises, uh, China slowdown created cross asset volatility as well. So this year, I mean, this 2025 shows exactly why understanding legacy market is crucial. uh, I mean, the macro moves and everything revolve around it. So right now, where we are standing, we'll discuss this as well. But you see commodities railing out. You see AUD. If you are a forex trader, you see AUD pairs, New Zealand pairs breaking out as well. So this pushed due to the rate cut expectation. It was a delay. It was, and Trump was highlighting this, that you need to rate cut, and why Fed was hesitant to rate cut, and there is upcoming in December as well. So we have to observe this because inflation is not cooling down. So there might not be a rate cut. So we'll discuss it as well. The DXY, it's a heart of forex currency, and I mean, if you can predict DXY well, I mean, you can catch most of the trends. You can catch, you know, at least the pair that okay, these markets will rally, this market will remain in pressure. So this is DXY performance, and the dollar index is down roughly 8% this year. And I mean, as inflation cooled, yield drop, the dollar is losing strength, and the liquidity rotated into commodities. We saw why gold, silver, and some of the commodities outperform. Nas 100 perform. Equity market perform all over the world. Crypto perform. Not talking about the altcoins, but overall generic BTC perform. So a weak DXY is one of the reasons why we saw strong rallies across gold, equities, and even risk asset this year. Now, important topic before moving on to the current setups, what I'm seeing, just 3 or 4 setups, and you often hear this risk on and a risk-free environment. Like, what is the current environment? What happened when you talk about the risk on environment? What happened when you talk about the risk of environment? All right, so these are key I mean concept in the legacy market, and we'll just go through quickly. This is the important slide, and if you are taking notes or you are listening from the mobile, just take the screenshot, because when liquidity is inflowing, interest rate expectation are stable, and volatility is low, market moves into the risk on environment. And that's when tech stock perform. That's what happened in Nasdaq. That indices perform all over the world. That's what happened. Crypto sees inflow again. BTC making new high. Even high yield currencies gains. So when we talk about New Zealand dollar, Australian dollar, it gains as well. All right. So these are and of course emerging markets also starting to perform. So if you are seeing this environment, you call it, you are in a risk on environment. People love to take risks, people love to invest in the stock market, because the expectation, the volatility is low, and people's expectations are I mean, it's cooled down, everything is going good. But on the other hand, when uncertainty increases, whether it's inflation rising, a geopolitical shock, a dollar breaking out, uh, I mean, traders shift into the risk off asset. And this means buying gold, buying US dollar, and rotating into the bonds and defensive stock. Uh, and this environment, we call it the risk off asset. So, I mean, a question to all of you, and I'll answer this later as well. In 2025, we have seen commodities rallying. We have seen like crypto rallying. We have seen indices rallying. So what is the actual environment? Is it the risk on, or is it the risk off? So this is the question to all of you, and I'll answer this in coming slides as well. Uh, I mean, uh, why I'm mentioning this risk off and risk of asset is due to the DXY behavior, and DXY is standing on a very important key level. And if you are following me on Discord or on Twitter, I am keep posting DXY chart more often, because it will drive the next bigger moves. All right, so let's move to the charts and see what setups I'm eyeing for the next few months. It involves DXY, gold, silver, US 500, and German DAX. So let me share my other screen. Yeah. All right. If you see this daily chart of DXY, and I mentioned this uh, in our slide as well, that we made the double bottom, or we are in ranging environment where we have this double bottom environment, and we have this. So price is resisting on it, and in the recent trend from September onward, price after bottoming up, making higher highs, higher lows, and it is somehow made a short-term double top. And will it break or not? Let's move to the bigger picture, because it will drive the next sentiment. So let me delete this box and move to weekly chart, and this is what I am seeing. uh, as early in 2008, if you draw this trend line, and this is just a rough trend line, it can be a line of best fit. We see their whipsaw here, and some whipsaw in here. I just draw it just for the sake of rough sense that where we are in the market. And if you see, we are respecting this trend line from 2008. Price went back here, and every time price come back here, price bounce. But how many touches we have? One, two, three, and I will call these two touches four. In technical analysis, we call it the more touches, the better. But the more touches, the weaker it become. So next time, if DXY is coming down, I'm expecting a breakdown. All right. But if this is the good support where we are, right where we expect price to go, price can move to touch this falling trend line. All right. So if we make this, we have a good upside in here. Sorry, this is the yeah, price can go and touch this falling trend line. But at the same time, where does it go? At the same time, as I mentioned, that price is standing at a key resistance area. So in December we have a Fed rate cut announcement, FOMC, and maybe price is waiting for it to show its hand. And I'm not saying that we are going upside, I'm not saying we are going downside, but we know that if DXY breaking out, and I'm not a DXY trader, what will happen to the markets? What will happen in the 2026? All right. So if we clear this resistance, we know we can have a retest and price can rally to 106 level. But at the same time, the other scenario is if we broke down this trend line, the next clear support which I can see is this area to the 80th. All right. So if DXY goes down, it will create what impact? We'll discuss it back into the slides. All right. The next chart is of gold, and I'll discuss this DXY chart again. And in the gold, uh, I mean, as you know, it's a Thanksgiving week, so price is just stopping today, and we can see the sending triangle. Symmetrical triangle in gold. So if we have this again as a breakout, what can you expect? You can expect the move to the both side. If price sorry for my mouse. price can go to target this 46 4700 area, or if we have a breakdown, price can go this area, but it will not go like I'm not just anticipating next move. I'm just marking, okay, if price is having this breakout, DXY do this, gold will do this, and might be gold will show its hand first before DXY. So I cannot target this in one go. I know this will be my first resistance area, this will be my second resistance area. So these are like setup which I am watching in commodity market for 2025, for the rest of 2025, or for in the first quarter of 2026. Hopefully with the Fed result, we will see some of the move. Similarly for silver, I mean, as I mentioned, that price is making new highs. It has already formed double top, and I I just mentioned it previously that the more touches and likely it will break out. So if gold is going, if silver is going to break this thing, which accounts for another rally, and we might see another move to the upside. Yeah, so this is how you, as a technical analyst, you predict okay, this will happen if these scenarios will come into play, and then you react. Like I know if silver breaking out this, silver can go easily to 60 62 areas, but will I go long in silver yet? I don't think so. All right, the next is US 500, and I wanted to draw to the weekly chart, and we might want to see the COVID drop, and the COVID was in 2020, right? So while making this presentation, I found out this setup, and if you draw the parallel channel along the way, you see price is just standing on its high. All right, so with this parallel channel, you might be able to predict the bottom. It was during the tariff announcement. All right, so right now price is making smaller candles now on the weekly time frame. It might reject, and if it rejects, then we have the downside level as well. So if what I'm seeing, gold and silver breaking out, a dollar is standing mixed. It can go up, it can go down, but it will drive, and equity market is standing on the resistance area. So if prices I mean DXY breaking out, then I know the equity market will be in pressure. So if US 500 be in pressure, then of course the Nasdaq will follow that, and of course the crypto will follow that. So you understand this, how you draw this connection. Okay, this market correlated to this market, this market correlated to this market. This is what happening here. All right, and then the German DAX and the German 40, and the year-to-date performance. I mean, right now it's 20%, and but if you see, there is a clear distribution or accumulation sideways movement in German DAX. So if prices, I mean, come on to break this support level, we know that price will drop sharply, because this is more than 6 months now for the DAX to be in this sideways, in the consolidation phase. Now let's move back to the slides, and let me share my screen again. Yeah, so these are some of the setup which I'm eyeing for the next months or the next few months. And if anything, I mean, they all are correlated. If anything shows hand or shows breakout first, I know what other market will going to do, so I can make up trades in other markets. I hope you get my point. The macro scenarios, and now you might able to connect. Now the scenario one for 2026, if it happens. So let's look at the three macro scenarios that will shape the remaining 2025 and 26 performance across indices, commodities, and the forex market. The scenario one is the dollar DXY breakout, and like DXY standing at 100. It's a psychological level. I showed you on the chart that it is also a horizontal resistance as well. If it breaks out, we might go to 108, and if dollars goes on to the 108, what will happen? It's a hawkish Fed. Global risk off flows. In this scenario, we generally see pressure on equities, and I remember US 500 is standing on the resistance, so we might see pressure on equities. Correction or slowdown in commodities might be gold remain sideways, gold remain in that symmetrical triangle for more than one or more 2 months, and we might not see break up or breakdown. Weakening in most global currencies, and this will cause tight liquidity in crypto. So you might see, you might call it, we are entering in the bear market for the crypto. But at the same time, if DXY rejection, and I know this support is going to break because it has tested, it is testing from 2008. It is going to test, will drop to 88 level. And this typically happen when yield peaks and inflation falls and the Fed signals rate cut, and Fed is doing so. So when DXY weakens, risk asset tend to perform well, and equities will bounce back, commodities will break out, and you will see the bullish trend in crypto, and maybe the all season we all are waiting for. The lastly is the scenario three, and is the commodity super cycle. And remember, I asked you a question, and uh, we have this question in our mind as well, that if, like, scenario three, in 2025 we have see commodities rallied, and it rallied more than equities market. So if you were invested in the commodities, you outperform everyone. But if you were invested in equities, you perform well, but you did not perform very well. But I hope you are understanding this, which this super cycle becomes possible only if supply tightness and higher demand collide. And this can push oil, gold, silver, industrial metals into the structured long-term uptrend. The issue, the super cycle can bring inflation back, which forces Fed to hold rates. And I mean, everyone was pushing Fed to cut rates. Trump is forcing Fed chairman to cut rates, but he's holding rates higher for longer because of inflation. And if this remain high, we can see commodity super cycle. So you get a very volatile macro cycle where commodities outperform while equities remain range bound or do not beat commodities. So we were in the scenarios three. So all of these scenarios are driven by macro fundamentals, which is liquidity, interest rate, inflation, and geopolitical risk. And as a trader, and mark my word, as a trader, we don't predict the scenario. I'm not predicting, okay, this scenario will happen, this will happen, this will happen. We prepare for all three and follow the market structure. Like, the last thing I do is open the charts and then follow the structure. It's not, okay, I am like anticipating it, and then if it goes well, it is a aha moment. But if it doesn't, the whole big trend I have missed. So if one thing is confirming out, the other thing will follow the suits. I hope it's making sense to all of you and listening. Now, where we are right now, and I'm talking about the current week, the past month, maybe this November. All right. So as of this week, uh, we are in a mixed market environment, and maybe we are waiting for the Fed announcement for the rate cut in December. But the tone is gradually shifting towards risk off, uh, which I believe. And equity markets, especially in the US and Japan, have shown weakness. I mean, it has bounced well in this week, but for the past 2 weeks, we have seen some weaknesses. That is a sign that investors are taking risk off the table. I mean, they are de-risking themselves. So we also see this in forex, where pro-cyclical currencies like AUD and NOK are losing momentum, while safe haven currencies, the yen, the Swiss francs, are gaining strength. And bonds are being bought aggressively. So, I mean, which is another classic risk-off signal. So this is what I think happening right now, in the current environment. Talking about as of now, it might change, but I think we are leaning towards some risk off. So overall, I mean, global uncertainty uh, from fiscal central bank developments, and I mean, you as a trader, you remain cautious. So sentiment is not fully risk on. It's not very easy markets anymore. All right. Now, the next slide is the TBN perspective. As a TBN, where we comes to. So at Burp Nest, I mean, this is one of the initiative that you see every year for the past 7 years, Free Trading Congress, where we call speakers from the renowned industry, and they tell you what they are thinking, what they are doing, and what they are doing in the industry. So our value is not signals; it's education. I mean, we focus on helping trader understand how multiple markets interact. Whether you trade crypto, forex, indices, macro influences, whether you trade your local stock market, our structured learning approaches, live sessions, I mean, multi-market analysis help traders build confidence and consistency. And you see actionable research, you see live session, you see calls with a risk management thing, and you see sessions every now and then um, from the team. So the goal is simple: trade the process, understand the cycle, and grow with the community. And if you have not joined the Discord, I encourage you to join now and see what's inside, because it's free. And we have sale going on our offerings. So do check out the website. All right, legends. I mean, I talked too much during this, and this was the one way uh, which I was expected. And here's the QR code for the website. Uh, Join us, join Burp Nest. If you haven't already, follow us on the Twitter. Subscribe the YouTube button. Click on this bell icon. Follow us on other social media platform, on Instagram as well. And I mean, uh, yeah. So this is just the slide, and uh, just for the last part, if you found this interesting one, drop your comments below. I'll read it. Join the Discord, tag me, tag Nest team, and we are here to help you all uh, avail this good opportunity and become a better good trader. So join Trading Congress on Discord and secure the early bird Black Friday offer. And all of the links will be in the description, and they are here to stay. All right, legends. See you on the other side. Join in, tune in for the next session.